Welcome back, traders and investors. We have Cate Long on the line. She writes financial blogger for Reuters and likes to write about the fixed income markets, including municipal bonds. Cate, how you doing this morning?
I'm great. How are you?
We're doing good. Just real quick, could you just give us your education background and how you ended up being a blogger for Reuters?
Oh, sure. I worked in the fixed income markets for about 14 years. Worked for an investment bank. Did a lot of work with regulators in Congress on issues related to financial markets. I have a couple U.S. patents about data visualization for fixed income. Um, and a couple years ago, Reuters asked if I wanted to cover this market as a blogger, which is an opinion writer. I'm not a reporter. And I said, sure, give it a try. So that's how I got here.
Tell us about your patents there. That sounds like a pretty interesting thing.
You know what? I'm just in the process of starting to commercialize them and talk to people. It's very useful system that standardizes and visualizes credit ratings and other market data so that people that are not educated in the bond markets can understand and read data related to bonds very quickly and easily. It's kind of like bonds for dummies. So,
Okay,
yeah.
that finds out our category. So
Everybody's. Most everybody.
all right.
Yeah.
So what are you seeing now in the fixed income markets and the muni bonds? I mean, people are looking for yield. I mean, the Fed came out and talked about the end of a QE here. What's your outlook for the fixed income and the muni bond markets?
So munis have a particular niche, which is that there's a lot of demand because people use them to shelter taxes, their tax liabilities. So we often get a different and greater demand than there is for treasuries. Markets have been pretty firm. We've moved up a little bit since treasury rates have moved around, but we're still at very expensive levels. We have some big problems. Puerto Rico, everybody's been talking about, which is a big problem. It's about 2% of the municipal bond market. Detroit has also been in the headlines again because they're getting all the pieces put in place to kind of wrap up the bankruptcy. But generally, markets are pretty good. What's happening now is the second quarter revenue numbers are coming in for the states. California reported yesterday that they had excess cash, about 2 billion more than they had projected, which was tremendous. This is something not seen in California since 2007. But on the other hand, we hear from Pennsylvania, Virginia, Kansas, Kentucky, a few other states where they had shortfalls on their revenues. So it's kind of a mixed picture, but overall, it's still very good tone in the market.
Okay, so you still think that the fixed income and the muni bonds are going to be holding up here? Really, not look. I mean, if we have a big spike in interest rates, I mean, isn't that gonna kind of put the kibosh on an economy that's really, I mean, it's growing but moderately?
That's a mixed picture. I mean, you have some that advocate the need for rates allowing rates to rise because it really does steal from savers, right? People don't make any money on any interest on the money they save. And then you hear others saying, oh, it will slow the economy, but rates are extremely low. And I'm not sure that any corporation would not borrow or any homeowner would not borrow if you got a small rise in rates. I mean, what you see generally, like in the home market, the mortgage market, when rates go up, is that refis drop, and you get some fall off in housing purchases. But if there's demand, people are going to go out and do this stuff. So I'm not, personally, I'm more an advocate of letting rates go where the market wants to take them, rather than trying to artificially suppress them.
Okay, let's talk about the Detroit bankruptcy at all. It looks like they're starting to pull through it. How are the bondholders and everybody gonna end up on that? And do you think that the city manager is going about the handling the bankruptcy in the right way?
Um, it's very complicated picture. You have some bondholders that are receiving 100% on the of 100% of their value, which are the secured bondholders, which are primarily the water and sewer, those that invested in water and sewer system. And then you have some what we call general obligation bonds that are taking haircuts between around 30 to 70%, which is tremendous, which is kind of a shock to the market that they will be haircut that much. Um, the the retirees are getting some reduction on their future pensions. And the big place they're suffering is mostly their health care in retirement is being eliminated. They're giving them about 10 or 11% of the value of that. Um, Overall, the question is, will this return Detroit to some kind of fiscal stability where they can run the city and provide services to the people? And there was a report issued yesterday by the investment banker for Detroit, this guy named Buckfire, and he alleges that it will, that with all these haircuts and imposing losses on all these parties, that the city will have a good chance to move forward with a budget that allows it to provide the services it needs to.
And what do you think about this Buckfire character here? You know what? Are you ready for this? Are you sitting down, Kate?
Yeah. Yeah.
My wife's maiden name is Buckfire, and
Oh wow.
that's her uncle, Uncle
Very-
Kenny. And
I'm, I'm glad you told me that before I commented on him.
no, no, you well listen to this. Listen to this. In the Detroit News a couple days ago, they were talking about what he was doing, and they put in the Detroit News, nobody likes Buckfire. Okay. And my brother-in-laws are attorneys and businessmen in the area, and they cut that out, and they're like, "Wow, that's going to be great for business." But boy, he's a slasher, huh?
Yeah, so this is the difficult situation that, distressed or insolvent cities or anybody face, which is you've got more claims on your assets than you're able to satisfy, and you have to distribute the pain. So, how do you do that? And you're going to make enemies, right? But in the end, what is asked and the court requires is that it be done as fairly as possible. And I think that's how we have to judge Buckfire and Kevin Orr and all these people that are involved in this work. And did they not? Hopefully, they're not preferencing anyone in this process. That they're doing this as fairly as possible and distributing the pain, as equally as the law allows it to be.
And do you think there's any other communities or cities that are, gonna file Detroit's queue later on down the line?
Sure, there's definitely. I mean, I've one like for example, one I watch is Scranton, Pennsylvania. Scranton, interestingly, is the hometown of Joe Biden, right? But in that case, the state of Pennsylvania doesn't allow cities just to go out and file bankruptcy. They have to get permission. So it's like Scranton has these huge problems, but they can't just run down to the federal courthouse and file. So, and similarly, in California, there are distressed cities. California allows cities to file after they go through a mediation process, but it's possible that we could see a few more cities there. There are definitely cities that took on too much debt, and some of it is bonds that they issued to investors, and in other cases it's pension liabilities where they've promised retirees much larger pensions than that they can ever pay in the future, and they're not saving. They never saved enough money to fund these promises.
And what about Chicago?
So that's a really important call. Some people do allege that that Chicago is like Detroit, and then others say that the economy in Chicago is very vibrant. Um, from a bond investor's point of view, what you want to look at is their tax revenues versus what their expenses are. It's very difficult. They've been using a lot of sort of band-aids to patch their budgets together. The schools continue to be, require a lot of money, and there's a lot of need there. Police, I mean, it's heartbreaking, right? The stories of last weekend with 14 deaths in Chicago. Someone pointed out if, we're sending money for Ukraine, but, the federal government doesn't, it's not taking any action to support Chicago. So there's a lot of problems there. Will they need to restructure their debt? I don't think so at this point. I don't think the market thinks so at this point. But we all have to recognize that they have very complex problems and very expensive costs. And also in Chicago is this issue of pensions. And unfortunately, this there was a ruling in the past week in state Supreme Court, Illinois State Supreme Court, saying that that health care could not be cut, which many people are taking to or interpreting to mean that pensions, public pensions, couldn't be cut in Illinois. So there's a big kind of funky brew in Illinois and Chicago related to the costs that they have and how much taxes they can collect from people.
Okay, and another brewing situation is Puerto Rico, and holy smokes! I mean, is that going to have, is there big exposure, by the U.S. government or U.S. investors that, could have some potential problems down the line for the U.S. markets?
So I wrote a piece. Everyone should check out my blog on Reuters.com this week, detailing the what mutual funds were particularly exposed to the problems in Puerto Rico, and what it looks like based on Morningstar data is that we have a couple of complexes, particularly Oppenheimer or the Rochester funds, that have held a lot of Puerto Rico debt. Um, Overall, mutual funds hold about 2% of Puerto Rico. High yield funds, high yield municipal bond funds hold about 5% of Puerto Rico debt. And that's, basically the extent of the problem. Would have, even if all those, investors left, would that cause a major sell-off? I don't think so, and others in the market don't think so. But it is a hot spot. There's no question. Puerto Rico itself is trying to ring fence the debt of its electric utility or monopoly, and its water and its highway system. Um, some people in the market think that they want to default more broadly, but the government of Puerto Rico keeps insisting that it's just basically this set of insolvent public corporations that they want to restructure and deal with. That's my belief. But you're going to see a lot of money changing hands in the municipal market with either hedge funds or other types of investors trading these bonds, trying to get a clear picture of what the value of, of the water system and the electric system and the highway is.
Ok-
So,
Okay, all right. And just the last question here. I mean, there's a lot of ETFs, that reflect, the different bond markets and the bond yields and stuff. And I mean, in your work and stuff, you got to pay a little attention to the markets. Is there any ETFs, or do you watch the 30-year bond futures, or I mean, is there anything that you keep your eye on that might influence your writing or your feelings about interest rates?
well, mainly treasuries, mainly the overall tone of the market. ETFs are kind of a derivative. We don't really follow that so much. But for following Puerto Rico or Detroit or Chicago, anyone, you look at the bonds of the particular issuer.
Okay.
But that takes a little more skill. And, that's the kind of thing that over time I'd love to build systems, tools for people to be able to do that simply. But right now, it's really not available in the market for individual investors.
And just your overall tone. I mean, for people that are invested and maybe have a high percentage of their portfolio in muni bonds. I mean, and unless you're in some of these troubled cities or whatever, you think just stay the course here in the
Hmm.
Okay, all
Yeah,
right.
absolutely. 98% of the market or 99% is fine. And then you have these trouble spots that are really hot and get a lot of attention. But overall, the market is very stable. Cities, states, electric utilities are paying their bonds, and it's basically fine.
Right, stick with the sewer and the water, right? People are going to use
Exactly.
use bathrooms and drink water, so right, you don't have to worry about that. All right, we've had Cate Long on the line, and she is a blogger, financial blogger for Reuters, giving us her input on the fixed income markets and muni bonds. Kate, it's nice to hear your cheerful voice. Thanks for coming
Hmm.
on, and we hope to talk to you again soon.
Thanks again. Have a great weekend.
Okay.